Hi, everybody. Thanks for joining me today. My name is Todd Menard. Today, we're going over the White Mountain and surrounding area real estate market statistics for the week ending August 11th. And we're going to take a look at the month of July closed numbers so we can see how we've been doing for the first 6 months of both years. Let's get right into our number. 24 days closed on market this past week, a 9.36 months supply. Absorption rate was at 10.68. Average list price this past week way up to 679,268. Average sale price this past week also up significantly, 643,990, and our list price to sale price retention at 94.81. Looking at active inventory, up again, 1,103 properties available. Pending is sitting at 50, and closed units month to date for August at 38. This past week, we took 79 new listings. That was up 27.4%, and that brings our days on market for active inventory to 116.1, and for closed, steady at 24. Looking at the lower left-hand side, where we have both our active inventory by price range and also month and closing numbers for the month of July at the bottom, you can see that the total number of closings down here and what each of those fields, those ranges made up. If we look here, 43% of the properties that were sold, and this is one of the ways in which you can use this, 43% of the properties sold were between 250 and 500,000. Another 20% between 500 and 750. Yes, there were also a lot of properties that were 0 to 250. Obviously, most of those more than likely are land, because this particular chart right here doesn't break this down for us, but more than likely either land or potentially single, double wide, some inexpensive properties there. Let's go in and take a look at the spreadsheet now. So what we do here in the spreadsheet is we have our week over week analysis, month over month analysis. So what I'm going to do is I'm going to go across, but I'm going to talk about July as well as I go across these numbers versus going down just this week and then talking about July. So this past week, if you look up on here, 61 was our target number, 79 listings taken this past week. That was good. 62 the week before, 78 taken the same week last year. So we take a look at that. If we look at how we finished July, we finished July at adding 289 units to the MLS versus only 273 the year before. Not large discrepancies here, but at the same token, when you've got basically almost 15 units difference, it doesn't make up a big deal of difference, but yet that's still about 5%, 5.9% of the entire MLS category. When we're looking at June, we took 296 properties in June, again, commensurate with the year before. So we're seeing a very similar cycle appear. We'll talk more about that as we get closer to it. So currently our active inventory is at 1,103. We were at 1,100 last week, 970 a year ago. And that 1,103 is made up of one coming soon property, 85 condo townhouses, 2 factory built properties, 222 manufactured homes. We have 2 modular homes, 67 park RV models, 1 plex, 3 ranch and farms. We have 721 site-built properties. That's remained the same. 50 new home construction properties. So totaling 1,103 properties, but a little bit different this week. I noticed that there were a few more REO properties that hit the market. So there are some depressed properties, 8 of the total. Not, again, a significant number, but to the 8 people that are distressed, it is. They're looking for obviously somebody to come along and purchase the property. So take a look at those, at least familiarize yourself with those. A lot of them are the smaller, inexpensive properties. I did take a look myself. Taking a look at the pending right now, the number of properties in escrow was sitting at 50. We were at 44 last week, so we increased just a little bit. We were at 59 the same time last year. But again, this is very early in the month to talk about closings, but pendings happen earlier in the month so that when we get to those get through the inspection period, we are now closer. The only thing remaining other than prior to doc conditions are maybe some repairs and or close of escrow. So, this is just one of those things that we can kind of monitor. So if we look across at June, we had an average of 204 properties that were in there, 230 the year before, 190. So what we've seen is when you're talking about basically closing 190 properties and you had 204 in escrow, we lost, what was that? That's 190, 30, not even 14 properties, 14 properties is what we lost out of escrow. So it was about 5%. That's a pretty consistent number. We can take a look at other months and see. So it isn't a big deal about a lot of properties falling out during escrow. That's not happening in the White Mountain marketplace. We look at it might happen to you, but it's not happening as a trend. When we look at closed product, we closed month to date at 38. We finished the month of July at 190 days on market. 190 units, I'm sorry. And so we were at 182 the year before. So that was up 4.5%. We were 164 is what we closed in the beginning at the end of June. So June, again, if we look at some consistencies here, we were significantly low in May. We had done 186 in the month of May 2024, only 118 this year. Then we bounced back to 164, 168 the year before, so we were still a little bit behind. But in the month of July, we're now on the other side, so now we're in the green or the black, depends on how you want to look at it. 182, we closed 190. We'll see where the market, could that summer market be here finally, where we're really going to start ramping some stuff up? We'll see. But as far as the number of properties that are being added on a weekly basis to the inventory, we're sitting at about 280 at this particular moment, is what the August expectations are, and that's about where we were last in the month of July. So again, we'll just continue to watch and I'll continue to monitor and share this information with you. So because of inventory increasing and the sales unit counts going down for properties being added into escrow week over week, we're sitting at a 9.36 month supply right now. 5.82 is where we were the week before. 7.11 were same time last year. Again, looking at median price, because median price is a real good indicator of the prices getting out of hand, are they jumping, what's happening, and so this is week over week. I always urge everybody to go back to month over month. So I'm going to jump right into June's numbers or July's numbers, because 397.5 is where we finished it. We were at 398.5 a year ago, so $1,000 less on the average of the median prices. We're looking at the median price, which is the middle of the road. You got 11 properties. It's unit number 6, and where averages change based on, obviously, take the total, divide by the number. So median is always a really good thing to look at to see whether or not prices are getting out of hand in a particular area. And that's not what we're seeing here. Look at the month before, 397.5 and 398, 387 and 359, a little bit of a dichotomy there. But again, this is very, very consistent market. It's a safe market for people. It's a good market. It's not a bad market. The only thing we would be to have a few more buyers in the marketplace. But again, overall, it's good. Looking at the average days on market, you got about 116 days on market for the typical inventory that's out there. And again, we've seen this repetitiously now. We're seeing that the days on market for the months of the end of July and into August are averaging 24 days on market. So in essence, the product that's closing is product that's just going on the market, not the older stuff that's been hanging around. So we're probably going to see some of the older stuff expire, maybe not relist, or maybe if they do relist at a different price where they're going to be able to play the current buyer's market game a little bit, and then be able to negotiate a little bit and finally find a buyer that's interested in purchasing. So we are not I've been saying this for the last couple of weeks now, we are not in a buyer's market. We're in what's called a transition market. And in a transition market, we're really in a neutral market. That's what between 4 to 6 months in most cases supply. In this particular case, again, if we're looking at the number of units that are available, the number of buyers in the marketplace, we're more in a sliding to the buyer's side. So buyers are thinking they want a discount on the price, they want to have concessions built into the contract, and they want the property to be perfect in inspection. That's not realistic. On the other hand, you got sellers that are still thinking they're going to be getting top dollar for their property. They're disappointed when there's a constant, continuous reduction in price. And now they get to a particular price where the buyer's expecting a discount. They're just not doing it. Well, again, this is one of those particular marketplaces where, if we teach our sellers how to play in this game, maybe the prices are too low. Maybe you need to go up a little bit and give that room to the buyer to feel like they've negotiated something. In the end, I know it's the same number, wholesale, retail to retail. But the psyche of a particular consumer, a buyer consumer, says those are the things that they're looking for. If you can't meet those, they're not pulling the trigger. Looking at list price to sale price retention, the sellers were doing really well last week, 96.39. But of the properties that went in escrow this past week, the seller gave up about 6, just under 6, 5.5%, somewhere in that particular range, a lot more than they typically anticipated doing. So I want to show you a couple of month-end things, then we're done. So for the month of how does 2025 compare to 2024? Well, right now we're about 2.5% behind in inventory as far as the White Mountain MLS is concerned. In comparison to last year, we're 1.39% ahead in volume. Could be just the few homes that have sold. Of those 900, they were a little higher in price. It could be a number of different things. Average median price, again, 380 versus 374.9. And a lot of times when we're doing these reports, depending upon the day in which they're pulled, could extrapolate different sets of data. So that's why there's always a little bit of ebb and flow. We're never sitting on statistical, no, that's the number, that's the exact number. These are accurate numbers, let's put it that way. Average sale price was $447 of the properties that sold so far year to date, $430 last year. So your answer to the earlier increase in valuation based on just averages is that the prices of the homes are a little bit more expensive. They're taking a little longer on days on market to close. The sale price, list price retention is the same. I retested this 3 times in 3 different sets of calculations because I'm like, nah, it can't be. To the 2nd to the 10th degree, and it is still 96.81. So the sellers are negotiating basically about 3%, 3.2%. The active inventory is basically, well, again, that's using more terms. I won't go into that right this particular moment. And then again, that 96.81 showing at the very, very end. So I wanted to just kind of put everything together and show you what the differences are. So let's look at a line graph of where the listings were last year. So last year versus the first 6 months of this year, look at these. Look how they are overlaying. Down in the valley, they're having the same issue. Or not the same issue, but the same set of results. The markets are mimicking last year. You go to inventory levels. Look, they're very, very, even look at the curves and how these numbers work. January, February, March. March took off, right? Remember we talked about that just a minute ago. And they increased because it was the buyer's market coming. Well, yes, we went from 600 units to almost double that. So I would say the summer market's here. Whether there's enough buyers or not, that's a different question. But let's look at buyer confidence year over year. Well, wait a minute. Yes, granted, 2024 is the gray line. There were many more buyers, buying up until May. Then there seemed to be a change in June. And then back up into July, we now had, again, the buyers are returning in the month of July. So again, that's why we had the green number, that we exceeded the year prior's production. And then closed units over here, again, you can see that's a similar type of curve, the crossover curves. But again, as you go through the month, in the month of 2024 in April, we had that spike in in product that came from April, closed units that came in April through the month of May. But then again, we didn't have that good of April and we didn't have that good May. But then all of a sudden now we took off. June was a pretty good month, recovering a little bit. And then now July gets us back up closer to those numbers. So at least year over year, if you're looking at these charts, you can come back to them. You can share them with consumers. You can use any of the numbers that I have. Please just make sure you leave the copyright down in the bottom right or wherever it may exist on whatever form you're looking at. And we do that just to protect you. If somebody wants to come after me and challenge my numbers, I'm more than welcome to have a conversation with anybody. And I have statistical analysis backup to be able to do so. So those are the numbers for the month of June 2025, and also looking at the first 6 months of June of 2024 in comparison to the first 6 months of 2025. So thanks so much. Let me know if I can help. Have a great day. Take care. Bye.